if you look at international coal prices, they are jumping up again. Is the move in the energy stocks here done largely? Or you think if, say, Brent and lots of global banks have upped their oil forecasts, average coal price forecasts, if, say, Brent were to go to 90 and stay there, if coal prices sustain at where they are, maybe come off a little bit, but largely at elevated levels, do you think there is more upside here in terms of energy stocks here in India? And what do you like there?
Yeah, Prashant, so this has been a challenge for the business. The business is not facing challenges on the demand side, but on the rising raw material side or cost side of the equation or supply chain disruption, including logistic and freight challenges, and now even power or fuel costs. So this may probably have temporary impact on the margins of corporate sector in the near term. So on the utility side, we are not worried because the utility companies, their ROEs are fairly stable.
We'll get to the users and how they are hurt. I was asking about like oil, like ONGC or say Coal India, or the gas companies, companies which benefit from a commodity inflationary environment like the one we are in. Any thoughts on those names?
Yes, certainly those producers will have some linkages to international prices. So not fully. I mean, there are e-auctions available to some of these commodity producers, including one of the largest public sector undertaking which manufactures coal. But the situation is dynamic, Prashad. We can't say with a lot of certainty whether this is sustainable over a longish period of time. So yes, in the interim, they may get the benefit of some coal linkages. The large part of it is still regulated in character.
Dhiraj, morning. This is Reema here. The weight of elevated expectations has weighed down on IT names. So TCS, for instance, is down 8.5% from the share price that it was trading at pre-quarterly numbers. HCL, which didn't slip so much yesterday, is down 4.5% today. Would you treat this miss as a blip and a decline as a buying opportunity?
It's not a blip, Reema. So let's understand the fact that the COVID pandemic has significantly accelerated the shift to digital. I mean, we are all aware in the last several months, and many companies are yet to make the transition to a fully digital operating model, have only digitized select functions. So some verticals like travel, aviation, retail may witness IT budget cuts, but cloud migration appears to be a multi-year opportunity as cloud journey for enterprise clients have just started. Now, even TCS results have clearly shown that the deal pipeline appears to be very strong, including a lot of hiring, while the attrition is the other side of the story. So areas of growth clearly include cloud, software as a service, ER&D, cybersecurity. And obviously, the sector is poised for one of the best growth rates. The only challenge the IT sector currently faces is of attrition and higher salary costs. And the valuations of large cap IT companies are not cheap. So any ounce of disappointment obviously is witnessing this kind of a selling pressure. So one should only expect modest returns from here on, and this is not just a blip, but yes, any corrections are on these can be buying opportunity subject to expectation of a modest return.
All right. Hi, Dhiraj. Good morning. This is Pavitra. A pack which has been doing really well, at least over the past month or so, are these auto names, right? Sort of playing that whole catch-up trade. And also the commentary seems to be quite good. So we had a Ramkrishna Forgings this morning say that they expect the chip shortage to abate in the next month or so. How do you look at this pack? We're also entering the festive season. So do you feel like these stocks are poised for a good move?
So, Pavitra, we like autos because we believe that the personal mobility like cars will again have a sharp recovery with pent-up demand and preference to avoid public transport. Even small pickup trucks that carry fruits and vegetables have started to grow thanks to online delivery or e-commerce. Besides, heavy commercial vehicle has also begun to show early signs of a sharp recovery. So we are positive more on the commercial vehicle side of the business, whereas two-wheelers may get disrupted because of the EV side of the business. However, the sector may have to deal with higher input cost pressures and semiconductor shortage in the near term. So we are watching the situation very closely before going overweight on the sector. Would rather prefer fleet owners given freight rates have gone up. So more of a logistics play as a preference versus OEM auto manufacturers at this point of time.
By the way, 50 lower now, so 17. Apologies. 17,893 is where the Nifty is now trading at. Dhiraj, what do you like? Do you like financials as a space? And anything in particular there? again, I mean, the pre-quarterlies that we've had and we've seen from the financial space seem to indicate decent numbers. Growth, though, has been scarce. Asset quality, etc., cost of deposits, cost of money, actually, all in order, but growth has not been coming for a while. What's your sense?
So, Prashant, I mean, we like several sectors which we believe are coming back and which have been under hibernation for several years. I mean, be it capital goods or manufacturing, we believe their time has come thanks to government's almost 1.97 lakh crores of PLI scheme over the next 5 years, or metals upcycle. We believe real estate cycle is obviously coming back again after many, many years. And this is one of the sectors which has seen or witnessing the biggest shift from unorganized C-grade local developers to deep-pocketed A-grade developers. On NBFC in specific, since you asked, we were cautious on the sector given uncertainty on sustaining good asset quality with lockdowns in COVID period. Our pandemic-induced pain so far on asset quality has been lower than expected. And larger conservative banks and NBFCs have actually done front-loading of provisions and have guarded well against any potential risk due to COVID stress on their borrowers. So disbursements have started picking up, but we are not sure if gross NPAs will continue to trend down for certain segments like SME or microfinance. So to navigate in banks and financials, we would rather be positive on housing finance companies on the back of strong real estate demand or low interest rates and better asset quality. Overvaluations in the sector, as far as banks and NBFCs are concerned, are in favor. And worst may be behind.
Dhiraj, thank you very much for your time today. That is the view coming in from Roha Asset Managers.